Hello, Jeff Green here, and welcome to another stock strategy update. And before we get started, as a reminder, please like and subscribe to this video, and especially if you want to get notified of more videos. That really helps me out a lot, especially if you get any value from these. That would be awesome to know. But I want to talk tonight about potentially an alternative investment to stock market only. You know, with the stock market at all-time highs and rumors of recession talk coming, there's going to be a pullback one of these days, and let's hope that you've got stops in place when that happens. But you can also get market timing information from this channel also. But I want to take a look at two gold funds, and these gold funds are a little bit more focused. Let me get a pen here. I'm going to talk about on the left side. There's this ETF called Gold, GLD, and this is the weekly chart. This is the monthly chart, and this is the daily chart. And on this side is IAU, and this is the monthly chart, and this is the daily chart. So I want to talk a little bit about what's been going on in bullion. And these two ETFs primarily, you can see from the text I wrote above, primarily have their holdings in gold bullion, and they each hold a different amount. But these two funds have been doing a lot better than funds that have a mixture of bullion or just have no bullion at all and just invest in companies that mine gold. I see those ETFs struggling a little bit, but gold bullion prices have, at least reflected by this ETF, have just shot out of a pretty prolonged base. So let's go through what I see on each one of these. These highs pretty much coincide for each one of these ETFs right in this area here. And if you follow this line down, if I can make a straight line, which doesn't look like I'm going to be able to, it comes in about July of 2020, and this one also is right around July of 2020 on the monthly charts. So that was the most recent high. And then you can see that on the monthly chart, it has broken, both of them have broken above that old high. And frankly, these two ETFs, let me clear this stuff off here and I'll talk about it. These two ETFs were brought up on one of my screens on my other website right around here. See, oops, sorry, I didn't do that. Let me get a pointer. Right around here, where this base was forming, and then this green arrow was a big indication that something was starting to cook on these ETFs. And the same thing on the daily chart for IAU, right around in here. So how many days is that? It was about a week, right? 1, 2, 3, 4, 5, 6, 7. About 8 days ago, I got an alert on one of my screens on my other site that something was starting to happen on these. And this line here was drawn across the highs of the daily, so I was really waiting for it to break above that high. But I was nervous about this line of support here. I figured what might happen was it might hit their head here and make another base here before going up. That's what I had anticipated would happen with both of these, because this is a overhead line of resistance that goes back, like I say, to a big monthly high back in 2020. So that's what I thought would happen. I thought I would have a couple of days here to sort of cogitate on these a little bit, but not to be, because even though I was watching these on Friday, Monday these things just shot right out of the gate on increase in volume. So that's the beauty of getting things early. You can get them as they break out to new highs. And I managed to pick up some gold shares right in this area here, because I usually don't log on in the morning, but I have an alert system set up that told me that this move was taking place. So I managed to get in here. Now let's compare these two charts. Now if you're going to go for gold, and I'm not telling you to do anything, right? But if you're going to go for gold, which one should you choose? Let me pick out some insights here on the charts. We'll look at gold first, the one on the left. So like I mentioned before, volume's very impressive on that breakout. That's what you want to see on a breakout. You might get it to come back and test this, but who knows? Maybe it'll be up here tomorrow. Who knows? Nobody can really know. And the same with IAU. Good breakout, but not as much as gold. Like gold had twice as much the average volume, this volume here being the average. And IAU, although it broke out on higher volume, it wasn't nearly the high of volume that gold had, GLD, this ETF over here. The other thing that made me a little bit nervous were these high selling days here. These are high selling days, almost twice the average volume. And you can see, although the price didn't come down much, that showed institutional investors getting out of this. I don't see twice as much selling volume in gold over the last month or however many days. That's about 26, 25, maybe 30 days. So that's what got me a little nervous about IAU. If you look at the MACD is shooting straight up on gold. It's a little bit, it's pretty much the same on IAU. The on-balance volume is very impressive on gold, and also very impressive, but not quite as much so as on IAU. And the ADX, now you won't get, or you typically get lower numbers on the ADX for ETFs because they just don't move as much as stocks, but there's 17.7 on gold and 17.3 on IAU. So there are some differences between these as far as expense ratios go and trading volume and liquidity. Gold, I think, is a better bet. At least that's why I bought it this morning. This is not a recommendation. You need to talk to your own financial planner. But clearly gold is accelerating upwards, at least the bullion ETFs. And you might want to consider diversifying out of the stock market, or maybe not. Anyway, like I mentioned, please like and subscribe. It certainly will help me get more exposure to my videos, especially if you like them. I'd appreciate it. And I hope you have a great rest of the day. Bye-bye.